Welcome back to the Traders Network. I'm Michael Yorba, your host. We're also streaming to you live on yorbamedia.com. All right, my next guest is Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick has hit it out of the park every time. Nick, you've done it again. I went back, I listened to your archives of the last show, and I don't know how you keep doing this, man. You're just really a rock star in the trading world.
Well, we've been fortunate. We've been fortunate lately. We've had a great 2011. We're going to try to just keep it going. But it's a humbling profession, Michael. You know that.
I do.
You could be wrong, but we've been pretty accurate so far, and hopefully we'll just continue to keep doing it.
Okay, before we get into the topics that we're going to talk about, I've got a audience member, Nevada, in the shout box showed up just to hear you. And we got two of them. TRI wants to know about Apple, and Nevada wants to know your thoughts, because when we finished the last segment last Thursday, you were just starting to do some cycle work, getting conflicting stuff on the bonds, and he wanted to see if he got any opinion or have any opinion on TLT.
Yeah, I've been looking at the TLT myself. Right now, I think that the TLT right around 110 level, maybe 109, looks very attractive for another move higher. You're putting in a sideways consolidation this week, so we may get a little bit more downside. What I'm thinking right now is, obviously, when the TLT trades higher, the market will trade lower because people are running to the TLT for safety. That's bonds, especially the long bond, 20-year and 30-year notes. So watch around the 110, 109 level. That's going to be an attractive level for a significant bounce on the TLT.
Okay, good answer. Then we've also have another person in there. Tiki wanted to know if you've got anything on Apple you wanted to talk about. Do you want to talk about that later, or something about the option?
Oh, we could talk about Apple now.
Okay.
Last week, if you remember when I was on the show, it was just before earnings. I said, watch for a run-up into earnings, but I think Apple's cooked. I think the apple's fallen from the tree, and after earnings were released, stock was down pretty sharply. It's also down again today, another $3. Apple looks attractive for a bounce around the 375, 370 area, but really, I just think Apple's done, to be honest.
It's a pie. It's apple pie now.
Yeah, it really, it's going to be a good trading vehicle.
Let me interject here for just a second, Nick. I want everybody to get this straight, because this was amazing for me to see. We talked last Thursday, and you said you didn't want to trade in front of earnings. You wanted to hold off until Tuesday, and that was the top. And then it gapped lower. No, you I was just like stymied here how good you are.
Well, appreciate
I mean, no, I'm looking at the chart here. I said, well, maybe should we? No, a little bit higher. Let's probably just wait till Tuesday, and then bang, it gaps lower right after earnings. It's hard to get that good, dude.
Well, it's all charts, it's all mathematics, and really, I hate to see it happen like this, because the passing of Steve Jobs, I think he was just a tremendous human being and an innovator, and he made any product that was out there, he made it much better.
Ditto.
So I mean, I hate to see it like that, but end result is the stock has run its course, and now it needs a significant correction. It's going to be still a very good trading stock, but as for a long-term hold, it's over.
Okay, all right. And any projections on price?
Well, like I said, it's a tradable low around the 374, 372 area. Really, after that, and if it breaks those levels, you're going to probably test that 200 moving average on the daily chart again. It'll just be a good trading vehicle. That's all I could say right now is 374 gets down there. You could buy it for a bounce. That's about it. Okay.
All right. Let's move on to the SPX. Nevada also wants you to comment on the plunge protection team.
Well, after the 1987 stock market crash, Ronald Reagan supposedly implemented an executive order to have a plunge protection team in there. If you look today, in today's market, I mean, I've been telling my subscribers, I even write it openly on our blog, to always watch the U.S. dollar index. So I don't know who can move the U.S. dollar index like this, but I know I can't do it. So today the U.S. dollar index surged up into the noon hour, and then you had a really huge decline. I know it doesn't sound like a lot, but the U.S. dollar index traded around 77.80 around the lunchtime hour, and then just about 30 minutes ago traded down to 77.20. A 60-cent decline in the U.S. dollar index really rocks markets. So we see this happening time and time again. Michael, last time I was on the show, I had said watch for the $80 level on the dollar. We'll get a pullback there. It's actually pulled back a little bit more than I expected. And, as for the plunge protection team, who is it? They call it the President's Working Group now. It's hard to make a whole lot out of it. I guess I'm just so used to them being in there, trying to save the markets, that as long as we can make money off of it, we really don't worry about it too much.
Okay. All right. Well, you also talked about copper last time. We were talking about the 130. I think it was 340. Excuse me. Mm-hmm. I had to adjust my glasses. The 340 level, and then you're looking for another pullback on that, and we certainly got it. Yeah, we got it. What did it close today? I think 308 or so.
Give me a second.
I'll tell you.
I believe 308. Yeah. I just don't have my futures chart available with this platform.
I'll get it for you. Don't worry about it in a second here. Right here. Where are we? 307.85.
Yeah. So basically 308. Ultimately, I've said it to my subscribers a long time ago, and I've said it on your show. Copper's in a 1-year bear market.
Right.
China is the bigger problem. It's bigger than Europe. China slows down. There's going to be no investment abroad. This 2012, and I'm holding a webinar this Saturday. It's an 7-hour boot camp webinar. We're going to take 2 5-minute breaks, and I'm going to show everybody why copper is going to go down until sometime in the middle of, or late next year. Okay. And we get short just about every bounce on copper going forward.
Okay, web address for that so people can get there.
Sure. It's www.inthemoneystocks.com.
Okay. Let's talk about option expiration because it's a big deal. I want everybody to hear your take on how you're using option expiration week to your advantage.
Well, what we do during options expiration, this is something that I've told subscribers, and I even openly have spoken about before. It's a game. It's a week of game playing by the large institutions. In other words, these institutions have these sophisticated programs, and what they're going to do is they're going to see where the small retail options trader has placed their bet. So just think about it the other day, Michael. How many people were probably long Apple 350 calls going into this expiration? I have to think there were probably a ton of people out there, especially the people at home that are trading with a small online account. Yeah. And what happens to Apple? It gets decimated. You see this time and time again. What happens is the institutions will play a lot of games. They have sophisticated computers. They know the small contract size comes in. It's not an institution. If you ever seen an institution put on some size on a contract, they're picking up 25,000 block, 50,000 block, 100,000 block of a call or a put. The small person's buying 1 contract, 2 contracts, maybe 10, maybe 20. But these are still relatively small size, and it's very, very easy to pick this up by the institutions. So what they'll notoriously do each and every month, this week leading up into Friday's expiration, because the small retail option trader really never exercises the option anyway, they're looking to get out with a premium gain or premium loss and settle out and close out the position before options expiration. The institutions know this, and they'll drive it, and they'll try and get people to close out their position at a loss. And they have sophisticated equipment that can do it, and they do it each and every month, and they've been doing it for years. I call it swimming with the sharks. This is the real Shark Week.
Okay, I well understood that. When you say they have a sophisticated equipment that can do it, open that up a little bit if you know anything about their equipment.
Well, I don't know exactly what the equipment is, but I do know, because I consult for several hedge funds, that they can tell exactly where the small retail trader has placed his bet. So what I always tell traders to do is to not play the near-term expiration. If you want to get in on this market and you're playing options, go out an extra month. Don't play the October contract, play the November contract. And if you can read the charts correctly, you'll usually be okay. But during the what these computers do is they can just sift out how many small contract bets have been placed. That's really what they do, and it's very easy. We can even do it ourselves just by looking at your options chain as the trades go off. You can actually tell. And the institutions know when there's big size, 10,000 block or more, that's an institution. So, those people have money behind them. If it's a home gamer or somebody, a retail trader, they don't have the money behind them because they're trading just, 5 contracts or 3 contracts.
Okay. Now, before we close out of here, I wanted to give this a little time. You're going to have the webinar on Saturday, and you're going to show everybody about your trading methodology. Let's open that up a little bit so they can get a kind of a peek about what they're going to see at the webinar.
Sure. Well, in this webinar, it begins at 1 p.m. in the afternoon on Saturday. It'll probably end about 7:30, 8 o'clock in the evening. What we're going to cover is everything. I'm going to cover my cycle work, my short-term cycle work that I use for my day trades, my scalp trading. We're also going to cover the work that I do to predict when markets will top, when markets will bottom. We're going to look at how you can figure out where moves are going to go to. We're going to talk a lot about symmetry. We'll go over Fibonacci. I'll tell people how I predicted the 2007 top, also the 2009 bottom, and you'll see how I get my interim cycle dates going forward. We'll also reveal the 2012 forecast going forward. So, there's a lot in there for everybody. I got to tell you, it's a must-take for everyone.
Yeah, I have to agree with you, especially with the track record that you've developed with us once you've been on the air with us over since the beginning of August. All right, Nick, we're gonna move on. Everybody, please go to this webinar. It's well worth the sit because this guy's been knocking it out of the park, and I'm not just saying that. You listen to the archives yourself. Nick, one last time that web address.
Yeah, web address is inthemoneystocks.com.
All right. Everybody, thank you very much, Nick, for coming on and being so good at doing what you do. We'll talk to you next week.
Thank you, Michael.
You're welcome.